Have you ever actually stopped to wonder how massive fleets of vehicles, thousands of remote workers, and these incredibly complex delivery networks manage to stay coordinated in real time? It's genuinely mind-blowing when you think about it. They rely on what you might call a central nervous system. Welcome back to The Explainer. I'm your host, and today we are looking at a company that is essentially building that very nervous system for the physical world, KAROOO Limited. We're going to unpack their incredibly strong first quarter results for fiscal year 2027. If you're fascinated by how the Internet of Things meets cold hard business efficiency, you are definitely in the right place.
All right, here's our roadmap for today. First, record-breaking Q1 scale. Second, the subscription revenue engine. Third, scaling Karooooo logistics. Fourth, global market expansion. And finally, future outlook and AI. Let's get right into it.
Okay, let's dive into this. Section 1. Record-breaking Q1 scale. Momentum in numbers. Before we throw a bunch of huge numbers at you, let's just anchor ourselves for a second. KAROOO Ltd., who owns 100% of KarTrack and 81% of Karooooo Logistics, basically has this massive overarching mission to digitally transform physical operations. They are taking billions, literally billions, of real-world operational data points from vehicles, assets, and field workforces and turning that into actionable intelligence. It's the hidden machinery that ensures your packages arrive on time and that entire supply chains don't just, well, fall apart. And looking at their Q1 report, demand for this kind of transformation is just surging.
Get this, 208,464,994. That is the total number of active KarTrack subscribers they've reached. And it's not just a vanity metric either. That represents an 18% increase year over year. We're talking almost 3 million vehicles and assets actively hooked into their ecosystem right now, feeding them a constant stream of data and, of course, recurring revenue. But the sheer speed of this growth, that's what's truly wild. 142,472. That's how many net subscribers they added in just this single quarter. Just imagine the pace of that customer adoption for a second. That's a massive 70% jump compared to the exact same quarter last year, setting a new absolute record for the company. It proves that the recent investments they poured into their sales capacity are seriously paying off. Moving on to Section 2, the subscription revenue engine, how they make money. Now, to really grasp the significance of their financials, we need to quickly make sure we're on the same page with a key metric, ARR, or annualized recurring revenue. Put simply, this is the highly predictable recurring cash generated by their subscriptions normalized over a full 12-month period. In the world of SaaS, software as a service, ARR is pretty much the ultimate heartbeat check for a company's health and future cash flow.
And this brilliantly illustrates why they are thriving. KarTrack's ARR didn't just grow, it accelerated by 19% year over year, hitting 5.432 billion South African rand. For some perspective, in US dollars, that's a 32% increase, reaching $335 million. It perfectly highlights the raw power and compounding nature of their SaaS model. Once they acquire a customer, that revenue just keeps stacking up predictably year after year like clockwork.
But here's the real kicker. It's not just that they're making money, it's how they're making it. A massive 97% of KarTrack's total revenue comes straight from these subscriptions. And since it's a software-driven platform, it yields an incredibly strong gross profit margin of 73%. So for every dollar of subscription revenue that rolls in, they keep 73 cents as gross profit to funnel right back into the business. That is a supremely sustainable, highly profitable engine.
All right, Section 3. Scaling Karooooo Logistics. The DaaS play.
So KarTrack is their main engine, but let's shift gears to KARO Logistics. To really get this, you need to know about DaaS, or Delivery as a Service. This is a brilliant capital-light model where KARO provides the tech platform to connect huge enterprise customers with a flexible, elastic fleet of third-party drivers. It is built specifically for quick commerce or Q-commerce, because let's be honest, absolutely nobody wants to wait 3 days for groceries anymore. KARO handles the smart routing and tracking so these enterprises can scale lightning-fast deliveries without buying a single delivery van themselves. And man, the market is completely eating this up. KAROOO Logistics saw its revenue skyrocket by an incredible 46% in Q1, hitting 177 million rand. Now, sure, the pace of this segment can be a little bouncy quarter to quarter depending on how those big enterprise clients decide to scale, but a 46% jump, that absolutely proves the delivery as a service model is fast catching on as essential infrastructure for modern retail.
Let's move to and see how this builds in Section 4, Global Market Expansion,
the world tour. We absolutely have to start in South Africa, which is the undeniable powerhouse of their current operations. Subscribers there jumped 18% to over 2.1 million. Even more impressive, subscription revenue actually outpaced that growth, climbing by 24%. This was no accident. It comes from a very deliberate, successful strategy to upsell their AI-powered video and CarTrack tag products to both new and existing customers. They are currently the largest operational intelligence provider on the entire African continent, and they are definitely cementing that lead. But they're certainly not just staying local. The Asia-Pacific and Middle East region, or APAC, is actually their second largest revenue contributor, and their subscriber base there shot up by a fantastic 22%. They see this specific region as their absolute biggest growth opportunity in the medium to long term. Over in Europe, subscribers are up 13%, and they're doing some really smart stuff by partnering with original equipment manufacturers, or OEMs, to pull connected vehicle data seamlessly into their platform. Meanwhile, the rest of Africa continues to be a positive cash generator, just steadily humming along at 4% growth.
Which brings us to Section 5, Future Outlook and AI. What's next? So, with all this scale, these crazy margins, and a global footprint, how do they keep the momentum going for the rest of fiscal 2027? Well, Group CEO Zach Callisto put it pretty clearly. Their product innovation is hitting the mark perfectly, and their core focus remains entirely on accelerating growth while optimizing the strong investments they've already made in sales. It really brings a human, visionary optimism to these massive financials. They aren't resting on their laurels for a second, they're actively pressing their advantage.
And honestly, their unit economics give them every reason to be confident. The ratio of their customer lifetime value to customer acquisition cost continues to exceed 9 times. Basically, for every single dollar they spend to get a customer, they expect to make more than $9 back over the life of that contract. Because of this, their strategy for the year is super clear. Optimize their new sales capacity, push the video and tag adoptions even harder, and critically, leverage AI not just as a feature in their products, but internally for their own business efficiencies.
All of this rolls up into a seriously rock-solid outlook. Even while facing some annoying foreign exchange headwinds from a strengthening South African rand, Karooooo has completely reaffirmed their full-year guidance. They are projecting a highly profitable 21% growth in earnings per share at the midpoint. It just proves that their business model isn't about chasing empty revenue at all costs. It's about scaling highly durable, highly profitable growth.
So, what does this all mean for the big picture? We are witnessing the rapid evolution of a company that has moved way, way beyond simple GPS tracking. As Karooooo scales this massive, intelligent central nervous system by integrating AI, automated workflows, and smart logistics, you've really got to wonder, how in the world will the traditional fragmented fleet management industry possibly keep up? It's a massive shift in the ecosystem, and we will for sure be watching how the rest of their fiscal year unfolds. Thanks so much for joining me for this explainer today, and keep learning.